Trading Forex crosses. Hi, it's Charlie giving you today's video. So I've had a question come through in relation to trading Forex crosses. So I've got the major one up here at the moment. I've got the euro dollar, the largest Forex pair. But the question was in relation to trading crosses. And so taking the information from something like the euro dollar itself and having a look at the euro against other pairs. So or other currencies. So let's have a look at the moment as I'm recording this. The euro's on an up day. It's not broken to new lows at the moment against the dollar, but the dollar is in a very overall strong position at the moment. But that's where the euro is. It's not breaking down as of when I'm recording this. And then if we go and have a look at the crosses, we can see that the euro against the pound is performing quite well. Here, the euro Aussie is performing quite well. The euro CAD has been performing quite well as well, and I'm sure the euro New Zealand as well. So across a number of majors, the euro just in this past week or two has been performing quite well. So how do we actually utilize that information? Well, personally, I don't trade much. Most of the time I don't trade crosses. Now and again I'll trade a cross pair, and it's nothing to do with anything being wrong with trading crosses. It's just personal preference. I spend 80% plus of my time probably trading euro dollar, so that means I'll miss out on all the patterns that there may be on cross pairs, but it suits me. I like focusing on just a few markets, whereas other traders might want to scan a larger number of markets and then just trade patterns off of those. But what can you do with this information? Well, the one thing that I will do at times is, if I'm looking at a potential setup on the likes of the euro dollar, is to see how the euro's getting on against other currencies as well. So if the euro's breaking out, for example, against the dollar, is it breaking out against other pairs? So it just tells us whether there's breadth there. Is this just the euro by itself against the dollar moving up or down, or is the euro collectively moving up and breaking out against some other pairs? It doesn't have to do it against every pair, but against some other pairs. So that's how I tend to use the analysis of looking at crosses. If I'm keen on doing something with likes of the euro dollar, sometimes I will have a look and say, okay, if the euro's breaking out, breaking down, what's the euro doing against these other pairs? And so the other part of this question was, the person who asked this question was, well, if he's going to trade currency pairs, is it okay? Is it scalable? Yes, it's more than scalable for an individual trader. I wouldn't worry about position size, because you're going to be very, very small right now, and even when you've got a larger account, I can't see it being a major issue. Now, the only thing is, actually, I've got this on the New Zealand dollar right now. The New Zealand dollar itself does tend to blow out on the spreads over weekends. So, you just have to factor that type of thing into your trading, that some pairs or some currencies do tend to have wider spreads at certain times, and that's certainly something to consider. But as far as you actually being able to trade it as an individual trader, I wouldn't worry about that at all. So in fact, I spend the majority of my time trading the most liquid pair in the world, but I know plenty of people who are trading cross pairs, majors, and exotics as well. And as individuals, in the main, it's not, that type of thing's not going to be an issue for you. But what happens is you get to know and understand the pairs you're trading, and that a pair like the New Zealand dollar is liable to have much wider spreads over a weekend. So you're not going to want to come out of a trade going into a weekend and going back in. That's just craziness. But if you're swing trading, then then your stops shouldn't be, or should factor in the potentials for wider spreads, especially if you get to a Friday. Then you can then assess how close the market is to your stop loss and whether there's a risk of just getting stopped out over a course of a weekend on wider spreads, so like on a Sunday night opening in very low volume markets. And that's one thing you wouldn't want to be doing when you've got larger accounts, but you'd need much larger accounts, so I wouldn't worry about it. But certainly I will use collective information, like looking at the euro against other pairs, especially when I've got a specific pattern. When I've got a specific pattern, I train our traders in this. Then if collectively we're seeing a similar pattern on a few crosses, then that can add weight to the trade. If I'm looking to do something on the euro dollar, then that can certainly help me there. There you go. That's a little bit on just a very snippet bit really on trading currency cross pairs today.